Like the name suggests, this show gets you answers to all of your stock-related questions, and we have been speaking to you directly. To that end, you can call us on the number that is on your screen right now, or you can send us a message, as some of you have been doing for the last several months. Incidentally, we just completed a year, so you can wish us happy birthday. NDTV Profit completed a year on the 8th of December. It's been a fantastic year, and thank you so much for the support that you've given all of us. Let's take a look at where the markets are right now. And you have the benchmark Nifty 50 that's trading with cuts of about 0.4% or so. And you have the broader markets that are actually holding up and doing quite well in trade, comparatively at least, as a result of which you have the market breadth that is tilted in favor of the advances as we speak right now. 0.4% gain for the small cap index as well. Look at that. So you have a widening as we speak right now, and more gainers than losers on the screen, but not too much to speak of, at least for the benchmark. Take a look at the contributors on the Nifty 50, and you have quite a few losers, not too many gainers, only about 12 advancing on the Nifty 50. Gainers being led by HDFC Bank as well as Larsen & Toubro. On the other end, on the losing end, you have Infosys and HUL actually from the FMCG pack that's losing ground, is the worst performer on the benchmark Nifty 50, and perhaps to a certain extent that is on account of one of the stocks that is down in the dumps today, Godrej Consumer. It's come out with a mid-quarter update. Not really often where you see that happen, Mahima, and it's not a good update.
Absolutely, Alex. So, talking about stocks which are not doing well, and as you rightly mentioned, it's down in the dump today, and this is because it came out with a mid-quarter update, which is not very likely, as Alex mentioned, and the mid-quarter update does not look very nice. The management has said it sees disruption in the current business, and this will continue for the going few quarters. What they've said is that 2/3 of the India business is being impacted. The Indian revenue will see mid-single digit value growth and a flat volume growth in the next few quarters. The EBITDA is set to decline by high teens in Q3 on higher base, and raw material pressures will continue to weigh pressure on margins. In terms of the soap portfolio, which is 1/3 of its revenue, is facing pressure because of palm oil prices inching up, which have gone up by almost 30% in the past few months. And in terms of the household insecticides, which is another 1/3 of the total business, is affected due to delayed winter and cyclones in the South India. So management does not look very positive on the outlook for the next few quarters, which is why the other FMCG staples are also under pressure, considering HUL, Dabur, all of these counters are seeing pressure on the back of this commentary coming in from Godrej Consumer Management. Now, other stocks which are in focus also include PN Gadgil, where Motilal initiated a coverage with a target price of 950. The stock is up around 4%. CEAT company has signed an agreement with Michelin Group of Camsos off-highway construction equipment. The stock is up 10.7% as we speak. And something that's doing well is also Paytm. Well, Paytm is set to sell around 5.4% stake in Japan's digital payments company PayPal Corp to SoftBank, but it has given up its gain. It's down to about its day's lows as we speak, but it was up in early trade
and
today.
And hit 52-week high as well. CEAT, by the way, interesting. I was speaking to Puneet, who tracks the automotive space, a little while back, and what he was pointing out, the reason why the street is taking this as so positive is that the acquisition of the Michelin brand, which is taking place right now, the company that they're acquiring will add revenues of 1,600, 1,700 crore rupees in FY26, that's the next financial year. The EBITDA margins of that company are actually better than CEAT's right now. 20% or thereabouts is what they experience, and CEAT's has been around 14%. So it would be positive, both in terms of a top line increase. By the way, CEAT top line around 10,000 crore rupees, so it's adding a good 15% to its top line, or will add in FY26. Let's see how that reacts going forward as well. Of course, it's taken very positively today. We will move to the questions that have come through. Reminder, you can call us on that number on your screen. Ashish Maheshwari, Director at Arihant Capital, and Osho Krishan, Senior Research Analyst and Technical and Derivatives at Angel One, are both joining us right now. Good morning, gentlemen, and thanks so much for taking the time. Let me start with the first question, and this one's for you, Osho. Dhani Services, if you've got a view, not a very large company, 5,500 market cap company. And we've got a viewer, Devendra, who's written in asking for a view. His bought at levels of 73 and he's in the green. Should he book out is a question.
Very good morning, Alex and Mahima. And firstly, I would like to congratulate both of you for completing 1 year with NDTV and completing NDTV the 1 year. So many congratulations to the whole team. Now coming to the question, especially on the Dhani Services Limited. So precisely, this is a very low volume counter, which has not been very tracked in a very regular manner. But overall, what we are observing in the last few trading weeks, there has been a decent upsurge in this counter from the zone of nearly 60-65 towards the zone of now 100. So on the monthly time perspective, there has been a breakout around the zone of 70-72 odd levels, and from there onwards the counter has seen a very tremendous movement which has been backed by more than average tradable volumes. So I expect that there can be a continuity to the higher trend in the short term perspective, but one should definitely try to trail their profits on the higher end. So I expect that in the coming period, there is a possibility of this counter moving towards the zone of 115 to 20, but one should definitely try to trail their profits. For now, 85, 88 is the zone where one should try to keep their stop losses and hold their position for short-term perspective.
All right, we have our first caller for the day. Satya from Hyderabad is calling us. Satya, thanks for calling in. How can we help you?
Yeah, hi. Hi. Good morning, everyone. So, I was currently holding Vodafone shares
Okay.
at a quantity of 4,000.
Mm-hmm.
I have bought at 8.5 rupees.
Okay.
So, can I hold or sell at the moment?
Okay. What's the time period, time horizon that you're looking for to keep holding these shares?
3 months approximately.
Okay, 3 months is the time horizon. And may I ask, when did you buy this and what was the kind of, thought process of buying Vodafone?
Actually, I have bought this stock a week ago at 8.5 rupees. Actually, it is a finished stock, right? There will be a chance to make a money like that.
Okay, Osho, I'll come to you for this one. Should you continue to be invested in Vodafone for the next 3 months?
See, overall, I think that Vodafone is a very risky counter. Again, being into a penny stock also below 10 rupees. So it will be very difficult for any price action to be tracked in this overall space. But I would say that in the overall trajectory that Vodafone is, it takes cover approximately around the zone of 8-9 every time, and on the higher end, it moves towards the zone of 14 to 15. So this is the historical trend for this counter. So in the last 3 weeks, we have seen a decent revival from the lower zone of 6.8 or 7 odd levels, and there has been a decent move. I won't say that it is a very strong movement that can be expected in this counter, but I would say that if person is having an aggressive approach, then can definitely hold to this counter with a strict stop loss of the bullish gap that has been made around the zone of 7.45. And 3 months perspective, definitely looking at the historical data, this counter may move towards a higher levels of 12 to 13. So one can definitely hold, but only the aggressive traders being aggressive in market can obviously hold this counter. I won't advise fresh recommendation in Vodafone as of now.
And do bear in mind, buying penny stocks is a very, very high risk strategy. You could lose a significant amount of money. I'm sure I'm sure Ashish will agree with that view. Ashish, I'm coming to you, and apologies for keeping you waiting. On Tata Motors, we've got a question. Devraj is tuned in, and he's asking, based on price to earnings multiples at a price of 809 or thereabouts, considering that it has dropped about 22% in the last 3 months, is it looking more attractive now? Ashish, can you hear me? Okay, we're trying to fix that feed. In the meanwhile, let me come back to you, Osho. We've got a question from Mr. Ekambaraya, and he's writing in from Hyderabad. He's asking for a view on latent view, and he's bought at a price of 441. He's asking what the view on the chart should be right now.
See, overall, there has been a corrective phase, which is latent view is into, and it is hovering well below the 200 simple moving average after a very long period of time. So I would say that for a fresh entry, I would have recommended it on a higher levels of 500 plus. But once the position is already taken at a decent levels of 440, So I would say to stay invested in this counter. On the lower end, again 438, 435 should be the stop loss that one should keep in this counter. Overall, there is a potential of having a sloping channel breakout in this counter in the coming period. I expect that in the coming period, the time it breaks out 490 to 500 odd levels, there is a very good possibility of having a very strong returns in this counter. So definitely a hold for short term perspective. 435 should be the stop loss that one can look for.
Okay, the next question is coming in from Senthil, who's from Nellai. Now, he wants to have a view on TVS supply chain share. Should it be held or sold? He's not given the quantity and the price at which he's bought it, but I believe he wants to know what the target could be or what the stop loss could be. So, Osho, I'll come to you on this one. How does it look on charts, TVS supply?
See, overall, there has been a consolidation going on in this counter. So I expect that in the coming period, there is a possibility of again a sloping trend line breakout in this counter. So near about 190 is the resistance zone. But looking at the recent trajectory, recent traction in this counter in the last 2 weeks, there has been a decent consolidation around the zone of short-term moving average. And today it has emerged above the 200 simple moving average also. So that's a positive development. One more day can give a very strong conviction of having a bullish approach in this counter. But I would say to hold on to the investment in the short term, we can expect a target of nearly 205 the time it breaches the zone of 195. So 195 is the immediate hurdle. The time it breaches that, 205 should be the target that one can look for in this counter, while on the lower end near to 178 should be the ideal stop loss for short term trader.
Okay. Ashish, if you can hear me, let me take the question that I was taking to you, and thanks for waiting. Hopefully we've resolved the issue with the feed. Devraj is asking about Tata Motors, and he's wondering, based on price to earnings, considering that it's dropped about 22% over the last 3 months, is it now looking more attractive?
Yes, in fact, now it is looking more attractive because if we see one trailing price earning multiple also of Tata Motors, now this is quite attractive. And like this stock is just now 100 rupees away from 52-week low of 700 rupees. So I don't think so. Things have gone so wrong in Tata Motors that maybe there's no value left in this. I think overall there was some sale off in Tata Motors from institutional side because this is a stock where a lot of FIA positions were there, and we have seen what has happened in the last 3 months from the FIA side. So now I think the stock is trying to find base at 800 odd levels, and it will be a good level to in fact enter in the stock.
All right, the next question is from Rajesh Maheshwari, who's presently in Singapore. Now, his query is on PVR Inox, whether it's a good time to buy at present from a short-term to medium-term outlook, and if yes, what should be the entry point? Osho, I'll come to you for this one. The stock has been doing well on the back of Pushpa 2, but do you think this is the right time to enter?
See, overall, the counter is into a kind of a sideways to positive momentum. There has been a recent jump from the zone of nearly 1280 towards the zone of 1750, and from there onwards we are witnessing some kind of correctiveness in this counter. But overall the trajectory looks very promising to me. I expect that further, if there will be any kind of correction, continued correction towards the zone of 1460 and 1480, one should definitely try to accumulate this counter. Immediately 1750 is the resistance, but the time it breaches the zone of 1750, then I will be very much aggressive and bullish in this counter, because then it will be having a kind of cup and handle pattern breakout. So short term perspective, another 20-30 points of correction can be seen, and that should be seen as an opportunity to accumulate for targets of 1700, 1750.
Okay, yeah, so apparently it's doing particularly well, Pushpa 2. Let us know what you think about the movie. Would you recommend watching? I don't know if our experts today have watched the movie. And do you need to watch Pushpa 1 to watch Pushpa 2? That's another thing that I want to know about. Kantesh Reddy is joining us on the phone line from Karnataka. Kantesh, have you watched these movies, and would you suggest that I watch them? And also, what's your question?
Good morning, sir.
Good morning. How can we help you?
Sir, I have converted this is call from third time, sir, from with you.
I'm glad that we are able to speak to you now, Kantesh. What's your question?
Sir, ITI Limited, sir.
Okay.
I have bought 80 shares, sir, at the rate of 338. It is a very bullish pattern. It was created, sir. When I can sell? How
Okay.
much?
So you bought it based on the charts that you have seen, and you think that it's a bullish view, right?
Yes, sir. When I buy now 338, it has come for 260 onwards, sir. That's why 1 month I have sitting from.
You've been watching the stock for a month, and what is the kind of time frame that you have, Kantesh? Would you like to hold it for less than a year or more than a year?
No, sir. Short term, sir.
Short
then
term.
I sell and will buy another share.
Okay, so short term would be what, 6 months or less?
No, sir. Within 1 month or 2 months, sir.
Within
within 15 days also, okay, sir.
Understood, got it. So let me take your question to Osho then. Osho, obviously he's been looking at the charts and he thinks that this is a positive view on the stock. How are you looking at the charts, and do you hold that view as well?
See, overall, this counter has seen a very tremendous rally in the last two trading sessions, but looking at the charts, currently it is at a very strong resistance zone on the weekly and monthly time frame. The zone of 355, 358 is a very strong resilience that has been historically seen as a corrective zone from where we started witnessing a kind of correction in this counter. So I would say that if the perspective is very short term, better to hold on with a trailing stop losses to the higher levels, but I am not very much sure for intraday. It will be like something like intraday. One should have to keep stop losses if the buying price is 338. But overall, if I have to say, I will say that if there will be a breakout above 355 or 360 on a closing basis, definitely it has a potential to surge approximately 30 points. But at present, it is approximately around the buying zone. So I would recommend to hold on, but that will be a very aggressive approach, because after these kind of rallies, a possibility of cool off or profit booking can be seen. So if Kantesh can hold the position with the same buying price as the stop loss, so 338 should be the stop loss for this counter. And in the coming period, if it breaches 360, then there can be another 30 points of rally within a very short span of time.
All right, so it's a hold for ITI at present. We have our next caller, Debasis from Kolkata, is calling us. How can we help you today? Thanks for calling in.
Hello.
Hi.
I want to purchase HFCL
Okay.
for a long term. It is right time.
Okay. Have you studied the company already, or do you want to know the fundamentals from our
No,
analyst?
I already studied the company.
Okay. And why are you so interested in the company then?
HFCL.
Okay. But why? Why are you so interested in the company if you've studied it?
I know that particular company making several types of equipment and that is supplied to Reliance Industries and other renowned concern.
Okay, Ashish, I'll come to you for this one. Interesting company into telecom infrastructure. Your view on this one?
Yeah, this is an interesting company in telecom infrastructure space for sure, but the stock is highly volatile. If you see the stock always goes up in by making higher tops and higher every time whenever any announcement of orders are concerned, but after that we see some big retracement. So my view is this is more like a trading play instead of more long-term investment play. If in this sector you need to remain invested in this telecom, in fact ITI, which we were discussing earlier in this show, this is a better bet, because whatever ITI used to do turnover in full year, now they are doing in a quarter, and this is the reason ITI stock is performing so well. So HFCL, instead of taking a long-term bet, though they are getting order recently, they got 8,100 crore BharatNet 2 orders, etc. But again, the margins are quite less compared to other players like Tejas Network, etc. So HFCL a trading play, and ITI and Tejas can be a better bet in this sector.
So you've gotten a combined view of the space. We've got a next question coming from Mr. Sukumar, and he's asking about Ola Electric. He's bought at elevated levels, 142, and he's asking what to do with this. Should you hold or should you exit? The stock is currently trading below 100, so the loss is quite considerable. I do not know the number of shares purchased. It has recovered over the last month or so. So Osho, on the charts, what should he do?
See, overall, there has been a negation to the formation of lower lows in this counter, lower highs in this counter. So I expect the zone of 85 to 82 now should be seen as a very strong support in this counter. While on the higher end, again 100, 105 is the immediate resistance. So for trading purpose, yes, it is on the verge of giving a breakout and it should be approached at buy on dips and sell on rise kind of a scenario. But on the lower end, I will better say ki stay invested in this counter. If there will be any kind of correction towards the zone of 80, 85 or 90, one can even accumulate further. But on the higher end, approximately 100, 105 is a resistance zone. Until it breaches the same, then better one should try to book their profits around the same zone. Above 105, again, it can move 10 to 15 points on the higher end. So buy on dips and sell on rise is the suitable approach looking at the overall technical data that I have.
The next question is from Rakesh Nagar, who's from Noida. He's having Muthoot Microfinance at 220 a piece, and he's bought around 850 shares. And he's a long-term investor and wants to keep holding it for the next 3 years. Is that a good idea, Ashish?
Yeah, Muthoot Microfinance, if you are having long-term time frame, then certainly a good idea to hold. The stock is also available near its 52-week low, which is around 180. But compared to other microfinance companies, the volatility and the momentum is quite low here. One good thing is that they are primarily dominating in the southern states where the delinquencies are compared to much lower than the peer set in microfinance segment. So fundamentally strong company, but should have long-term horizon or at least 1 to 2 year horizon for investment.
All right, Gautam is calling us from Visakhapatnam. Gautam, good morning to you, and how can we help you today?
Good morning, Alex. How are you?
Very well. I'm glad that you're calling me on Monday morning. How are you?
Yeah, I'm good. Thank you so much. Yes, I have purchased 37 shares of Motilal Oswal Financial Services stock.
Okay.
I purchased at 990.
Right.
So I just want to know whether I want to hold it for 1 year, that's for sure. So I just want to know whether the price is going to be increased or decreased.
Okay, can you help me with a few things though, Gautam? Did you buy this purely as a trading play, or is this something that you bought based on the fundamental story that Motilal Oswal and other people in the wealth business have experienced?
Yes, Alex. Based on the fundamentals, because I have seen they have improved their profits in all their verticals except this housing finance. So their operating profit margin also increased, and the Q2 results also good. And they are also expecting 30% improvement in their upcoming quarter business.
Yeah.
This is what my analysis. Based on those analysis only, I have purchased the stock. But experts should tell whether I have taken the right decision or not.
Okay, and I'll also take the liberty of asking whether you can add more at the current price. Thanks, Gautam, for your question. I'm going to take it to Ashish. Ashish, Motilal Oswal, interesting play. A lot of people have spoken about it. What's your view? I've been looking at the mutual fund schemes in the equity space, and they're doing particularly well, particularly the mid-cap scheme.
Yes, in fact, they are known for their stock picking for so many years. So their even AMC's business is also doing well. And one good thing is, if you see their performance, last year they did almost 2,500 crore kind of profit, and in last 6 months only they did 2,000 crore. So huge growth is there in the business, and one good thing is that they are into all spaces, whether it's retail, institutional investor, HNI, and entire gamut of financial services they offer. So this is the reason now market cap is almost touching 60,000 crore. But in my view, in long run, I am quite bullish as far as broking companies are concerned, be it Angel One or Motilal Oswal. I think these kind of companies which are market leaders will continue to thrive. So remain invested in this company.
You keep adding, just a quick answer to that. Would you keep adding?
Yes, I like to surely add it around 950 rupees.
Fantastic. All right, Gautam, I hope that answered your question. We have to slip into a very quick break. We'll be back on the other side to take more of your questions. Do stay with us, Osha, as well as Ashish. Stay tuned. We'll be back before you know it.
When the whole whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide.
Welcome back. You're watching Ask Profit, a show where we answer all your stock related queries, whether they're fundamental or technical. You can ask all your stock related queries on the number that will be flashing on your screen it'll be flashing on your screen right away. My team is not. Yeah, there you go. You can call us on the number that's flashing on your screen right now. Yeah. Or if you're not a caller, you can ask us all your queries on the WhatsApp number that is right now flashing on your screen. Moving on to our next query, Chandan from Hubli, Karnataka is asking about Godrej Consumer, and he wants a long-term view on this particular counter. Ashish, I'll come to you for this one. The kind of management commentary that has come out on Godrej Consumer does not look very positive and constructive, because of which the is tanked almost 9% in trade today. Your view as to whether this is the right time to enter the stock? Ashish, I think you're on mute.
Yeah.
Sorry. I think still stock is expensive because the way they are revising their numbers of growth, and they are not that confident also this will sustain this kind of numbers. So in my view, overall this sector is not looking that promising, and Godrej Consumer being a market leader also, if they are giving pessimistic view about takeoff in urban market, and rural market also is not faring that well, this is a cause of concern. Another thing is, as RBI has also revised their estimate for Indian GDP growth from 7.2 to 6.6, and in my view, even going down further, it may even come down lower. So if money is not being generated, I think the first consumption which takes hit is the consumption to these FMCG companies. So I am not that bullish as far as Godrej Consumer is concerned. I think it's a stock to avoid for time being.
Okay, all right. So there's a very clear view coming in from Ashish. Shiva is calling us from Bengaluru. Shiva, good morning to you, and thanks so much for calling us. How can we help you today? Shiva, can you hear me? Good morning. Okay.
I can. I'm sorry, I was on mute. Good morning, Alex.
Good morning.
Yeah, no, I brought 100 shares of IRFC at 152.35, and I would like to know whether it is prudent to hold it or sell it at this current price point.
Okay.
And I would also like to know what would be the outlook of the share by your experts.
Understood. Help me with a view as to why you bought it. What was the kind of thinking that you had? Was it a fundamental purchase? And how long can you hold this, Shiva?
I can hold it for another 6-8 months as well. That's not a problem.
Okay.
But I didn't buy it looking at the fundamentals. I just joined the bandwagon.
You joined. Okay, fine. That's fair. Considering the stock has done 100% plus over the last 12 months, it's a good bandwagon perhaps to jump onto. Let me see if the bandwagon has got a lot of velocity and momentum so that you can benefit from it as well. I'll come to you, Osho, on the technicals. What is the kind of momentum that you're seeing in the stock?
See, overall, this counter has started gaining very strong traction in the last 2 or 3 trading weeks. Also, on the technical front, there has been a kind of a revival or a reversal that can be seen. At present, it is hovering just above the near the 200 simple moving average and is on the verge of giving a breakout. Overall, technical structure is very positive for another rally of 20 odd points in the very short term period. So I'm expecting a target of nearly 180 in this counter in short term time frame. And also from a longer duration, also this the technical structure looks very, very good. But for short term, I would be stuck with the range of 180 to 160 in the near term. And once we see a decisive breach above 180, then another 20 to 30 odd points of movement can be seen in this counter from medium term time frame. Short term, 180 is the target.
Right, so it's a hold for IRFC. The next question is from Devender from Hyderabad. Now he wants to know as to which stock could be a good stock to buy in the renewable energy space, and he also wants to know that within the renewable energy space, is this the right time to enter Adani Green, and he's a long-term investor. Ashish, I'll come to you for this one. Your view on renewable energy sector?
See, renewable energy sector overall looks good only because now whatever major expansion is happening in India in power sector, it is happening in renewable only. So all renewable stocks are going to do well, whether it's Adani Green or any other stock. But my pick at present is Waaree Energies. In my view, after correction from 3,700 to now 2,900, Waaree Energies has a very good potential because they are the market leader in the home segment, and this is a sector showing a lot of growth. So in my view, a stock which you can buy at this price point is Waaree.
All right. I'm wondering if the coffee that I sent you has reached, Ashish. Just check if the coffee is at the door. In the meanwhile, let's go to the next caller. We've got Rakesh Arora who's tuning in from Ahmedabad. Rakesh, thanks so much for calling us. How can we help you today?
Yeah, hi, morning, Alex. I just wanted to know, have a fundamental and technical view about Dynamic Tech. I'm holding 8 shares at the price, and I am looking it for long term.
Okay, no, I've lost you on just the most operative portions. So the number of shares has been lost. So 35 shares, is that right?
Yeah, it is 35 shares at the rate of 6,000 per piece.
Okay. And what is the kind of thinking that you had, Rakesh, on this? Is this a trading bet?
No. It's a long-term investment betting on defense sector.
Okay. And do you have other stocks in the defense space, or is this your solitary purchase in the defense space?
No, I have another one, that is your Azad Engineering.
Understood. Okay. And this is part of an overall portfolio, right? So what you're asking basically is, what are the prospects for Dynamatic Tech, and should you continue to hold? Should you add more at the current price, right?
Right.
Okay. So Ashish, what's the view on Dynamatic? It's currently trading well above the buy price of 6,000 at close to 8,000. Would you add more at this current price?
See, if I look at the performance for this last 2 quarters, is not still that encouraging. Last year they did almost 120 crore profit. This time it's only much lower. I just don't remember the exact number, but I remember this is much lower this time. But still, this is a stock where not too much liquidity, etc. is there. So stock is commanding this kind of premium. Though stock is into good segments, that is hydraulic, aeronautics, and security systems, etc. But in my view, instead of Dynamatic Technology, if you look at Zen Technologies, which can give you much better return, because the kind of growth it has given in last couple of years, this is a stock to watch for in future. So just study Zen Technologies also, then take a call.
Right, that's the view coming in on Dynamic Technologies. The next question is from Jerry, who's from Kochi, and he's holding 5-Star Business Finance Limited. He's bought it at the 713 levels. He's not mentioned the number of shares that he's purchased, but I believe he wants a long-term view on this one. Ashish, I'll stick with you. Your view on 5-Star Business Finance?
Actually, I'm not that optimistic or that bullish as far as business finance companies are concerned, because in my view, particularly banking stocks are available at much lower valuation. So why to give very high valuation to companies like 5-Star, business finance, etc. So I'll stick to banks like SBI or Bank of Baroda or Indian Bank instead of NBFC at this price point.
All right. Nimesh has got, okay. So Nimesh is joining us all the way from New Jersey in the USA. Nimesh, thanks so much for writing in, and thank you so much for your patience. I believe you've been waiting for some time. So you bought Escorts Kubota at a price of 1,372, and you've got 75 shares, and you're looking for a technical view and a long-term view on the technicals. So Osho, I'll come to you on this one. If you've bought at levels of 1,372, the stock is currently trading well above that. What is the strategy that you would employ right now?
See, overall, I expect that obviously the person is a very long-term investor, and overall the technical structure from a longer duration or a broader time frame is very constructive. In short term, yes, the counter is into a kind of a corrective phase, but it is hovering near the 200-day simple moving average. So I expect that over a period of time, there is a possibility of this counter to have a strong revival. Immediately 4,000, 4,100 is the short-term zone that one can expect, but that is a very short-term duration. From a longer-term duration, 4,400, which is the lifetime high for this counter, can be retested from a medium-term time frame, and again after that also we can have a review over this counter. So I would say better to stay invested in this counter. The counter have seen a decent correction and is hovering near about a very strong support zone. So I would say that from here onwards, another 500 to 700 points of rally can be seen in the short-term period. So stay invested even for short and medium to long-term perspective.
Right, so it's a hold for Escorts Kubota. We have our next caller, Mohan from Mumbai is calling us. Thanks for calling, Mohan. How can we help you?
Madam, I am having 1,600 shares of KSB Limited.
Okay.
And I am holding it for a very, very long term, last 20 years. I just wanted to know the future prospects of this company.
All right.
Over a long period of time.
Got it. And what was the kind of thinking when you bought these shares? Did you study the company?
Yeah, I studied it. It's a German company and they've been doing very well.
All right. Ashish, I'll come to you for this one. 1,600 shares bought at 107 a piece, and he's sitting on a significant amount of profits. Do you think he should continue to hold these shares?
Yes, in my view, you can continue to hold these shares because all these pump companies are really doing well. And we have seen even companies like Shakti Solar, Shakti Pumps also delivering excellent return. And KSB is just slow and steady, but fundamentals are good. They are making 60 crore average profit every quarter and a good pedigree of promoters also. So remain invested. My target for this stock in 1 year is again 4 digits.
Wow, okay, that's good. And I mean, 8 times gain. I do not know how long you've been holding, but congratulations on the patience that you've displayed. Abhishek is writing in from Mumbai as well, and he's looking for a fresh entry in Unicommerce e-solution, and he's wondering whether to do so right now at the current price. Any view on the charts, Osho?
For Unicommerce, I do not have a very strong track on this counter. So it would be very difficult to have any kind of view at present looking at the technical charts for this counter. So overall, one can definitely look for a fundamental for an entry point in this overall short or medium term duration. But on technical, I do not have any strong track in this counter.
That's understandable considering that it was listed not too long back. Ashish, any view on the fundamentals, and would you suggest a fresh entry based on the fundamentals?
So this is again a e-commerce selling company, and almost 2,000 crore is now market cap. So in my view, these companies are showing a lot of traction in the market, but depends upon the kind of profitability that they are able to report in future. And people have really made good money after the IPO was listed. So if you have got allotted shares in IPO, I don't know what was the purchase price, then I'll recommend to exit. But if you have bought post listing, then at least have 1 year time horizon. My target will be 300 rupees in this company because these kind of companies have really good future.
All right. So despite the underperformance in the recent past, perhaps you can look at it and study it a little more. Rajshekhar Reddy is calling us from Bengaluru. Raj, thanks so much for calling us. I believe your question's on Deepak Nitrite, is that right?
That's right. Is a Deepak Nitrite holding 1,000 shares at 320.
Okay. When did you buy it? Because it's I'm assuming it's been quite a while.
Yeah, it's almost 5-6 years back.
Okay.
That time chemical sector was limelight and valuations was good at that point of time.
Okay. So Raj, did you buy it all at once or have you accumulated over a period of time?
I staggered the purchase and then final purchase value average was 320.
Okay. And you've held despite the fact that the chemical space has had its share of problems over the last 1 year. What is the thinking in that time?
Because my base price is so low,
yes.
I thought maybe 1 or 2 years the sector itself may turn around. That was my idea.
Was that difficult though, Raj? I'm curious what you had to... so when you were seeing the effect on the share price and the drop from the absolute peak, was that difficult for you to deal with?
Absolutely not, because I'm a very long-term investor, and couple of quarters here and there, I really don't bother much.
I'm glad to hear that. So let me get you a fundamental view on this and whether or not you can add more at this juncture, whether Deepak Nitrite is looking positive in the second half of this financial year. Ashish, on the fundamentals, you heard that Raj has tremendous patience. He's not going anywhere. 320 is the acquisition price for Deepak Nitrite.
Yes, and if I see even 50 rupee low, 2,000 and 3,200 was 50 rupee high low. So stock is quite stable if you ask me compared to other chemical plays. Again, the reason is they are into very specialty segment, that is specialty chemical, and they make nitric acid, which is which is not easy to make, and they are having the maximum market share. In fact, they are number one in nitric acid, which is used in diversified industries. And there's a reason, though the profit has not grown. If you see last 3 years, They are doing almost 850 crore profit, and in last 6 months also around 400 crore is the profit. So run rate is going to be same, but as consistency is there and you enjoy decent market share, that is why market cap is quite stable compared to other chemical companies. So my suggestion will be to remain invested in Deepak Nitrite at this price point. Once fortune changes for chemical companies or the tide turns, then you will get again 3000 plus mark.
All right, that's the view coming in on Deepak Nitrate, but we'll just diverge a bit and onto an NDTV Profit exclusive. Road projects worth 40,000 crore rupees stuck as NHAI seems unable to score land approvals. Vikas Srivastava has the exclusive details on this. Vikas, what do you have?
Yeah, right. So basically close to 40,000 crore worth of HAM projects, basically what is called as hybrid annuity model projects. They are stuck because National Highways Authority of India has not been able to provide the appointed dates. Now appointed date happens after the letter of award is given to these developers. So letter of award was given almost a year back, or close to, in some of the cases, even 1.5 years back. But these companies have still not, or these projects have still not received the start date or the official start date for these projects. Now the reason for that is, under HAM project, NHAI promises to provide 80 to 90% of land at the time of the letter of award, but that has still not happened, and because of that the appointed dates have not come. So the reason or the challenges are basically right of way and compensation related issues, and also litigation in some cases, because of which the land acquisition has not happened. Now because of that, what's going to happen is that most of these developers will not be able to execute the projects which are almost as high as three times of their total order book. Now this is, according to some of the industry analysts, is expected to bring down the order books to less than 2 times, and the execution of the construction activity is also expected to go down by almost 10% in FY25 compared to FY24. So now all these issues are going to be a big challenge for a road sector, which is already facing various challenges. Like last year, Bharatmala project was stopped because of cost overruns, and no awards are happening in that. Even in the first half of this year, the awards have been very slow. So all this is going to have a massive impact on the road and the construction sector. So I mean, we expect that soon the acquisition happens and these companies get the letter of awards and also the appointed dates, as soon as possible.
Vikas, thanks for giving us those details. Probably this will weigh in on a lot of infrastructure stocks like IRB, L&T, HT Infra, as well as Ashok Belcon and Afcons. We'll have to wait and watch as to how the order books of these companies are being impacted in terms of execution. But moving on, the next query, and messages like these always make my day. Alex, he said that, Alex and team, you've always helped me with very clear information about stock analysis. I'm watching you for the past 1 year regularly. Keep watching. I'm very glad we don't have the person's name, but I wish you also give us your name so that we can thank you with your name on air.
Mike, his name is Mike.
Okay, we have his name. Okay, Mike from Cochin, thank you so much for those kind words. I believe he has a question on Kitex, and he wants a short-term view on this particular counter. Osha, I'll come to you on this one, especially when we're seeing that the Bangladesh plus one is now kind of having a positive impact on the Indian textile sector, and these guys export cotton goods. But chart view on this particular counter for the next 3 months.
See, overall the technical structure is very positive in this counter, but we have to consider the kind of a returns that it has provided in current year. So approximately 230% already up the counter is. So I expect that technical indicator wise, the counter is already into a very strong overbought terrain, but there has been no respite of any strong profit booking or correction in the counter. The 20-day exponential moving average has always provided a very strong cushion to this counter. So I expect that till the time the momentum continues, one should try to hold their position. For now, on immediate basis, the support lies around the zone of 680, 685. So one should trail their profits, keeping a stop loss of 680 and keep riding the momentum till it persists.
Harvinder is tuning in from British Columbia in Canada, and he's asking about Tata Steel. He's bought 510 shares at an average price of 157.75, and he's wondering what the next 1 to 2 years have in store for this particular company. he also wanted to know about Tata Motors, Ashish, and I've mentioned that you are positive at this current price. What's the view on the fundamentals for Tata Steel though?
I'm not actually that bullish on as far as steel industry is concerned, and even Tata Steel per se. Even if you have seen, might have seen the stock has underperformed in this pack compared to other players like JSW Steel or even JSPL, etc. So it's a avoid. In my view, nothing is going to change overnight, and the way things are happening in the world, it's not that easy to compete with the Chinese still, because in China they are slowing down and the steel prices are also not picking up. So pressure is going to remain on steel companies. So Tata Steel is avoid, but Tata Motors, I think at 800 rupees, it's a good buy.
That's the view coming in on Tata Steel. We have our next caller. Mohan from Hyderabad is calling. Mohan, thanks for calling in. I believe your question is on Genesis International.
Yes, madam. Good morning to all. I really thank and appreciate the entire team of NDTV Profit for bringing the latest news and business aspects.
Thank you so much.
I'm really addicted to your channel. I used to watch previously CNBC Awards and ET now. Now I am completely following you.
Thank you so much, Mohan. That means a lot.
Yeah.
Yes.
My query is Genesis International, which is on LiDAR maps, like C Info, MacMy India.
Mm-hmm.
And I bought it 500 shares around 950.
Okay.
I would like to know the prospectus of this company. Can I hold it long term? And I'm having little bit profit. Can I get out of this company?
All right. He's sitting on a profit of roughly 17,000. But Mohan, before I move on to our analyst for your query, thank you so much for those kind words. It means a lot, and this is what keeps us going, right,
Absolutely.
Alex? Thank you so much for that. Ashish, I'll come to you on this one. Your view on Genesis International?
See, Genesis is a stock which is doing very well. If you see, stock has touched 52-week high, I think today, or in previous trading session, it was almost 998. And if we see even their performance-wise, also they are doing quite well. If I try to analyze their financial numbers, they did 21 crore last year, and almost 16 crore they have already done in 6 months. There's the real parameter: how much you have done previous year and how much profit as you have already done in 6 months is very crucial stage. So Genesis is again a good buy, and in my view, they are sitting on quite good order book also. Fundamentally, company is doing well. Very low interest rate, etc. Also interest cost they are paying. So it's a buy in my view. And if you are already holding these shares, just remain invested.
And it's seen significant growth over the last 12 months and even 6 months. It's a doubler in just 6 months. So watch out for this stock. Genesis is the name of the counter. The question that is coming in next is on WhatsApp. GK is asking whether he can take a fresh position in Trent as of now. Not too long back, the company did have a little bit of a tumble. It has recovered somewhat from that, but not to the level that it was. What's the view on the charts, Osho?
See, overall, as you mentioned, the counter has seen some kind of correction from the higher zone of nearly 8,300 towards the zone of approximately 6,200 in the recent period. But from those levels, the stock has again started gaining decent traction, and I expect that even in the coming period, there will be a gradual move on the stock prices. I expect on short term, approximately 74,7,500 is the immediate target that one can expect in this counter in a very short term duration. While on the lower end, near to 6650, 6700 is a very strong support. So one should definitely stay invested for short-term target of nearly 75 kind of a zone. But if it breaches the zone, then again we can see a further continuation to the primary uptrend in this counter.
All right, that's a view on Trent. It is time to hit the rapid fire segment. Ashish, Osho, you know what this means. We're going to throw as many questions as possible at you over the course of the next 2 minutes. Do try and answer as many of them as possible in as short a time frame as you possibly can. The first stock that we're talking about is Dixon Tech. And this is a short-term question, or rather, actually, it's a question about what price you would buy it at. Based on the technicals, Osho, is this the current price? Is this the price to buy?
It's very overly priced, so I would expect that if there will be any kind of correction towards 17,000 or 16,800, that will be an decent levels to accumulate this counter.
All right. The next query is from Sumit, who's from Bangalore. He wants to know that he wants to exit Torrent Pharma by the end of December. Is that a good strategy? Osho, I'll stick with you for this one.
Again, this counter has a potential to retouch the zone of 3,500. So yes, try to keep it in a watch list. If it breaches 3500, then there can be a possibility of near to 300 points of rally. If not, then better to exit at 3500, which is a very, very strong resistance for this counter.
Okay, Federal Bank bought at price of 212 average. Pandian wants to know whether to hold, whether the CRR cut will have any impact. Ashish, on the fundamentals?
You can continue to remain invested in Federal Bank. This is one of the best performer if you see in banking sector, almost touching 52-week high. So stay invested.
All right. Jyoti from Dubai is asking that she wants to create a portfolio around solar and EV sectors. Which will be the best stocks to invest in, Ashish?
Yeah, in my view, JBM Auto as far as EV is concerned, and Vari Energies in solar sector.
Got it. SBI bought at levels of 588, making quite a bit of gain. Satish wants to know whether to hold or sell. Osho, on the charts?
Definitely a hold. One can expect a target of nearly 900 in the very short term perspective, and that is a break or make zone. So I would expect that further continuation can be seen.
All right. Asit from Kerala is holding 1,000 shares of Sagility and he wants to know a view on this. Ashish, I'll come to you for this one.
Yeah, Sagility India, I think he's talking about.
Yes, Sagility India.
Yeah, the huge buyer circuit is there on this stock and already at 52-week. I remain invested.
All right, let's get across to Karan Adani, who is speaking at the Rising Rajasthan Global Investment Summit.
When you assumed leadership in 2014, the Nifty stood at 8,000. Today, it stands at an astounding 23,000, reflecting the confidence of investors, entrepreneurs, and citizens across our nation and abroad. And perhaps the most remarkable, according to me, is this one. When you assume leadership in 2014, a staggering 23% of our population lived in poverty. Today, that number has been cut to 11%, with 250 million people lifted out of poverty. This is not just a statistics. It is a story of families finding hope, of children dreaming again, and a nation reclaiming its promise. Honorable Prime Minister, you represent hope. You represent aspiration. And today, families across India feel empowered to dream, and the promise of better tomorrow feels very tangible. Under your leadership, the world no longer views India as an emerging power. It looks to us as a leader of Global South. You have set a benchmark for developing nations, combining economic progress with dignity, influence with conviction, and balancing strength with humility. Honorable Chief Minister, under your visionary guidance, Rajasthan is undergoing a historic transformation. The issuance of 25,000 appointment letters and the ambitious goal of creating 4 lakh jobs for the youth is a testimony to your commitment to empowering future generations. Your vision for doubling the state GDP in the next 5 years gives us immense confidence to further expand our investment in this state. Let me now take this opportunity to outline some of our investment plans in Rajasthan. The Adani Group plans to invest over rupees 7.5 lakh crores across various sectors of the state economy, with over 50% of this investment being made over the next 5 years. Let me elaborate. We plan to build the world's biggest integrated green energy ecosystem involving 100 gigawatts of renewable energy, 2 million tons of hydrogen, and 1.8 gigawatts of pump hydro storage. These investments will turn Rajasthan into an oasis of green jobs. Beyond energy, Rajasthan is critical to our ambition to become India's largest cement company. We will set up 4 new cement plants to build additional capacity of 6 million tons per annum in the state. In addition, there are other investment plans such as developing a world-class facility at Jaipur Airport, multimodal logistics parks and ICDs that will support your transformative plan for Rajasthan. Honorable Chief Minister, as I conclude, let me reaffirm the Adani Group's commitment to Rajasthan. We look forward to working with you to help shape a future that not only honors Rajasthan's legacy, but also sets new benchmark for your state's timeless legacy and boundless potential. Thank you. Jai Hind.
Thank you. When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome to KYC, a brand new show at NDTV Profit. In the fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. KYC, Know Your Company, is a show designed to give you regular investors powerful, actionable insights into the fundamentals of every listed company every day. And today we have with us Tata Power, which remains in focus at the moment. Now, Tata Power, of course, as we all know, is, well, rather it's started its journey as a power generator. But, through the course of the many decades, what it has also done is, pivoted towards, I would say, not just, distribution, but of late, over the last few years, we're also looking at the company, venturing into, renewables as well. So let's take a look at what it actually does. So of course, it's in the business of generation, transmission, and distribution. Moving on, it also aims to produce power completely via the renewables future. And moving on, of course, all the focus remains on renewables with respect to what the company wants to do. But as far as its current capacity is concerned, well, thermal is the major one, but we're seeing a significant ramp up as far as the solar capacity is concerned as well, coming in second in that list at around 4,000 megawatts, about a little over 4 gigawatts. And, they're also in fact into waste heat recovery. So that's as far as, your overall generation portfolio is concerned. But, in every show, what we try to do is we try to rate these companies based on a handful of parameters with respect to what this company has done. And among these, what we are considering is the income statement, of course, the kind of growth that the company has seen over the past few years. We talk about the latest balance sheet. We'll also compare and consider the return ratios naturally as a consequence of the income and the balance sheet, and of course cash flows. Among other factors, what we're also considering is shareholding and street cred, how the company has done in terms of its share price action as well as dividend payment, and not to forget what the street is making of Tata Power. I reckon that for us was a better parameter as compared to price to earnings or any other valuation metric, because it's always subjective, and we thought that the street view would be better. But to take us through all of this, well, I am also now with Mika, who's gonna join us to give us more insights in as well as help us with the ratings of the company. Mika, thanks for joining in. Let's start off with the income statement. Yeah. What are you noticing here?
So revenue of FY24 stood over 61,000 crores, EBITDA stood over 12,000 crores, and net profit almost 4,200 crores. When you look at the 3-year CAGR, which is the compounded annual growth rate, revenue and EBITDA in the range of 20 to 25%, while net profit has seen a strong over 35% growth, and this is a thumbs up because it's seen consistent growth over the past few years, and the income statement looks good as of now, Agam.
Talking about the balance sheet too, it's not unhealthy. That's something I can certainly tell you, but it does have a very large gross debt. But we must remember that the company is working with a significant amount of large working capital requirements, which means its short-term debt is also significantly large. That said, it does have a net worth of around 34,000 crores, and it has very healthy cash flow generation as well, something that I'll talk about as well. So at least as far as the balance sheet is concerned, at the moment, its gross debt stands at around 54,000 crores, which is a little less than 2 times its net worth. But do remember, the cash on books at the moment is also a little over 9,200 crores. So it's fairly healthy. The only reason why I would give it a neutral rating is because of the fact that the debt is a tad bit higher, because of which they do incur substantial, interest costs. But save for that, largely given the kind of operation that it runs, it's not a terribly bad balance sheet, which is why I would give it a neutral rating. But what about return ratios, Mika?
So we've seen an uptick over, since 2021 to 2024. Return on equity in 2021 stood at around 5.4%, while return on capital employed stood at around 5.9%. But there's been volatility, there's been a steady rate of growth. But in 2024, return on equity did see somewhat of a correction to 12.1%. It has moderated. And even the uptick in the return of capital employed is barely 0.2%. So it's a neutral rating in terms of ratios, because while they have seen some improvement over the past years, FY24 is where they saw some moderation to little to no growth. So it's a neutral rating on the return ratios. But Agam, how do cash flows look like?
Not too bad a picture out there, because we are certainly looking at an improvement here, at least in terms of cash flows from operations. And there's been an uptick there as well. Nearly 6,000 crores cash generated from operations itself. Even on a net basis, 2,400 odd crores. I know that numbers is tad bit lower than what we've seen in the first half of FY24, but we must remember that this is also on account of several changes, and this is just the first half. So I'm not necessarily gonna put any negatives here. It's a thumbs up as far as cash flows are concerned. But overall, shareholder rating is the other thing that I'm going to consider as well. So it's a well-held company, but the promoter holding firstly stands at around 47%. That hasn't changed over the years. What has, however, changed quarter to quarter is a reduction in the institutional holding for the company and an increase in the retail holding. So perhaps based on all these parameters and the fact that the promoter holding is also less than 50% at the moment, I would give it a neutral rating and nothing more than that. What's the kind of performance that the share price has seen, Mihika?
Yeah. The performance of the stock has been good. 5-year share performance 720%. That's like an 8 times growth. And 1-year share performance has also not been too bad. It's up 36% in terms of the 1-year share performance, and it continues to do well. We've also seen some kind of uptick today. So it's a thumbs up rating on this part. The next part I want to talk about is dividends. Now, FY24 dividend payout ratio stood at 17.29 versus 19.16 in FY23. So there has been a decline, and it's actually very it's a key thing to be noted that the company's dividend payout ratio, as per data, has been declining since FY21. And around FY21 it stood at around 45. Right now, it's as of FY24 it's at 17.29. So it's a thumbs down on this parameter because the dividend payout has been declining over the past several years. Lastly, Agam, what does the street say? What are the analyst recommendations on the counter?
Well, so Mihika, overall, when it comes to the number of buys, is certainly a lot more. In fact, more than the holds and sells taken together. So you have about 14 buys, 4 holds and about 8 sells. But the potential upside is largely nothing at all. Practically nothing. Just about 2% uptick, which is as good as being flat. So that perhaps is the key takeaway, which also gives you an idea about whether or not this particular share price at which Tata Power is trading at is fully valued or no. This is, of course, one partial way to consider it. But for now, I would also give this a neutral rating. So if we actually do consider all the parameters that we've spoken about, so we have the income statement, we have the balance sheet check, return ratios, cash flows. Even in the next set of parameters, we have the shareholding pattern, the street cred, dividend payment, and street coverage. If you total all these thumbs, well, what you will get is a score of 5 out of 8, which isn't too bad, but it certainly could be better. So that's as far as the NDTV profit for rating for Tata Power's performance so far is concerned. But let's move on and talk about the strengths, weaknesses, opportunities, and threats. Mika, I take away the strengths and weaknesses here.
Yeah, I'll start off with the strengths. It has a diverse portfolio in terms of what it does. It has transmission and distribution. It's also power generation. In terms of power generation also, there has been a diversification of portfolio from thermal to more focus on renewable energy. It also has an extensive distribution network, and this is a very significant revenue generator as well, because when you talk about power generation, the tariffs are fixed as per PPA and the power demand keeps on being volatile. It also has a strong capacity pipeline which provides the company with long-term visibility as it adds new capacity additions every year, and it also as well has a strong brand reputation and a proven track record of execution. So that stands good for the company. In terms of weakness, well, it has high capex requirements, which we'll get into detail a little later, but these high capex requirements is expected to keep their debt levels high, and we've seen debt levels increasing on a year-on-year basis. The power sector is also heavily regulated, so there are certain times of regulatory and environmental concerns, and they are dependent on fuel imports, which tend to be very volatile in nature. So that's where weaknesses are concerned for Tata Power. But Agam, in terms of opportunities as well as risk, how does the picture look there?
Mika, clearly it's going to be renewables, right? And it goes without saying, because the last 5 years is where the company has been focusing on, and the opportunity in the solar rooftop, that is again something that's come through over the last 2 to 3 years, and Tata Power has continued to focus there as well. There is also potential in the pumped energy storage projects, but that is something that should be being talked about this year itself, and it does seem like Tata Power has taken that baton and moved forward as well. In terms of risks, of course, there'll be delay in project execution. There is also a considerable reliance on import of coal and other fuels. That's something that will eventually come off as the portfolio pivots more to renewables, and of course intense competition in the renewable space as well. So these are something that a lot of these factors was where the Tata Power will have to grapple with. But, let's take this conversation forward with an analyst here. We have Rupesh Sankhe, he's the Vice President of Research at Elara Capital, who joins us on the show. Rupesh, good afternoon. Thanks for joining in. How are you rating Tata Power at the moment? What's your view in keeping in mind the rest of the sector?
Good morning. Definitely, their plan of incurring 1.46 trillion kind of a capex for next 5 years seems to be very ambitious. No doubt, next 5 years we'll see significant capacity addition or capex on the solar cells as well as RE capacity addition, pump hydro storage, and the projects in the Bhutan. That will have a lot of capex going ahead as versus earlier 4-5 years capex. So definitely it's a 2.5x more than what they have incurred in the last 5 years. But the thing is that here to note down that they have shown significant operating cash flow in the last 2 years because of Section 11, the entire fuel cost pass is there on the Mundra side, as well as their solar EPC is doing good. Other verticals are doing good. So the operating cash flow is very strong to support this kind of a capex. And no doubt, the opportunity is there for all the players in the renewable space. And because of new FDRE tenders, they will get benefit of their own solar EPC, solar sales, solar modules manufacturing. So they are completely integrated players. And that advantage they will have. And once hydro storage comes in picture, I think they will be in a competitive position to gain a higher market share in the renewable energy tenders. And that is why we are very positive on the stocks because of strong operating cash flows as well as the opportunities there in the FDRE front. So definitely I think CapEx looks very, very ambitious, but they can achieve this target if they go aggressive on the FDRE front and they maintain their capex on the pump hydro storage. So overall, in terms of valuation also, stock is better as compared to other private players. So they are trading at close to 25 times PE multiple, 11 times EV/EBITDA seems to be attractive. Again, there is a value unlocking possibilities there once they start thinking on the IPO on the renewable energy side. So there is a lot of value unlocking is there. So from that perspective, I think company is well positioned and valuation also looks attractive at this value at this current market price.
Right, Rupesh. I just want your view on risks to your thesis. So naturally we're expecting cash flows to remain where they are right now, and that's in the the positive territory. But should there be some issues, the capex plans also come into peril. Maybe they will get a bit delayed. Besides that, there are also several other factors that could come in the way of execution of the various projects they're in. What are the risks from your end that you're anticipating or envisaging in the way you're looking at the company?
Definitely some risks are there in terms of execution. So whatever the timeline they have set up by 2030 looks very, very aggressive. There could be 1 or 2 years kind of a delay. Again, the tenders that they are for the FDRE tenders, they have to be very aggressive there. So getting winning tenders as well as keeping track on the under construction projects is going to be challenges for them. As well as in terms of entire sector, if